Good morning, good morning. Today is Thursday. First of all, welcome back to Big Happy Tradings. I had somebody ask me why the name. I teach my kids I want them to live a big life and live a happy life. So we always talk about the big happy, and I refer to that all the time with my boys. So I thought that would be a pretty simple yet powerful name for a trading channel. So let's get started today. So I have been doing I've done tons of back testing. And for those you don't know, I really focus on one strategy and one strategy only. That's the 920 EMA Cross. I think I've been trading for 17 plus years, 18 plus years, well, closer to 20 years, dabbling off and on, but very seriously the last 10 years. And when I tell you that my charts used to look like rainbows with everything all over it, they really did, and I'm not kidding. I used to have all kinds of my chart. I probably at one point had um, I don't know, 15 indicators on my chart, and I'm not even joking. I probably had 15 indicators on my chart at one time, and I really have narrowed it down to I'm going to say the EMAs are one. So you got the 9 EMA, which is the blue line, and the 20 EMA, which is the thicker line. And I'm using the fancy one that changes colors when it's red and green. You don't need that. Doesn't matter. You're going to see the angle and the trends. I use the VWAP. And for some confluence, I use the CCI, which is similar to the RSI. And you can use the RSI or CCI. I prefer it. And that's for another video for me to share why. But today I want to go over my trades. I'm on Eastern Standard Time. So as I'm recording this, it's 8:06 a.m. So the New York market's not open yet. You've got the crossover of the end of the London market, and you get some pretty volatile moves. So I'm watching the chart here to see if any trades set up. And I'm looking, as you can see, we're on the 5-minute chart. And we really use that to monitor our chart. And I want to teach you a couple other things. Well, let's look at the sessions of how we did yesterday. We had on a winning trade on the Asian session, and then I had one winning trade early this morning on the London session. So for those of you who don't know, the Asian session opens up at 6 Eastern time, and with daylight savings time, that is 2200. So right here is the Asian Open. So I went immediately, and it was a quick trade. So I thought that we were going to continue down, and on the 5-minute chart, soon as the market opened, literally I was in at 22. I was in instantly, and let me look at my chart on the other side here. I got in right here at 22:05, and I actually used a 1 minute to get into this trade. So let's look at, let me pull up. I've got the actual trade on my charts to the right, and I'm still working on whether or not I can show you the trade views a little much, but I want to see if I can show you the Ninja Trader without exposing my account. I've got questions into them. I could edit the videos and cover it, but I'm not a big editing guy. I'm trying to come to you guys raw and clear. So yeah, I got in here at I was at 66. I got this cross pretty well. And again, as you guys know my rules, I had a stop of 10 points, and I had a target of, I always target 2 to 1. Now, when I say I got into this trade and it was a quick one, I got in and I'm following my own rules. So I want to go for 20, but when this thing comes down here, I actually took, and I got out on this, I only got, I think I got, hold on. Yeah, I got 11 points out of this one. So what I didn't like, and let me show you what I didn't like. So I got into this and it looked like it was going good. It looks like it might have wanted to come back, but it came right back. I should have added, but adding is another strategy for later. It came back down in my direction here, and then I saw these bottom wicks pushing up, pushing up, pushing up, and then I saw this doji. A doji, for you that don't know, is where you got the same length wick on both sides of a small body. There's a lot of indecision there. And then I saw this push up, and I got out. And it was good that I got out. I took my 10 points. This would have came all the way back and almost took me out. So there's no need. If you got your 10 points and it's at night and I wanted to go to bed or go with my kids, so I took a quick 10 points. That's all I took at it. So we had a winning trade, and that's that. So I got up this morning for the London session, and this was better. So, and those of you who don't know, what I always do is I mark out the London, the Asian high, the Asian low, the London high, the London low. So the Asian high, and if the London high hasn't hit that, I just leave the Asia. So the previous Asia low was right here. It was at 6,600, and you can see that was a huge, just a wick down to it. But I still thought, wow, this looks like this market wants to continue down. You can see this downward trend this is going down for hours, and it was continuing to go down. Looks like we're getting a little bounce now. I don't know if I'm trusting that. If we looked at the 1 minute, but I want to show you the trade that I got. So the market opens at the 8th is 4 a.m. Eastern with daylight savings time. So the market opens at 8 is, you see 8 UTC time. And if I can figure out a way to change this to EST, I'm sure there's a way, but my brain, I correlate the times and I want you to be able to see the time. So 8 on this UTC is 4 a.m. Eastern time, which is the London Open. Okay, so because they're 6 hours or 5 hours ahead of us, so they were at 9 a.m. So that's 9 a.m. in London time. So they're getting up, having their tea and crumpets and all the good stuff. So I saw this cross and I got in, and again, I got in early because I saw this wants to go down, and I had a really nice trade. Let me pull up the short position. Let me confirm. I think I got a 66. I was in at 66.12. No, 66.10. I'm looking at my other chart here. Sorry, forgive me. I'm verifying. I was at 66.10. Flat. We had a 10-point stop loss here, and this was a nice trade. So what I did here is, if I stayed in the entire way here, I would have gotten the 28. I would have gotten 28 points. What I did here, though, I let it wick down to there, and I didn't take it. And then similar, what I always do, guys, when I see this big wick, shows me that there's buyers stepping in. Looks like it wanted to go back down. I saw this indecision, and when I see this indecision candle and then the next candle goes above it, that's where I get out. So I got 21 points out of this trade, and then I've been done for the day. I haven't gotten back in because I making breakfast for the kids and all kinds of stuff. So right now the boys just got off to school, but so 30 points. Not gigantic days. I mean, I traded with a little more size, so I mean, it's all relative. If you're betting, you're risking $1,000 and you make 10 points, then you win 1,000. If you're risking 50 and you make 10 points, it's $50. Here, if you're risking 50, you'd have made 100. I mean, that's significant if you have a small account. The strategy is a good one. And again, what I can tell you for those of you, if you want to get in and make the risk to rewards even better, is when you get in at this level here, you can set your stop above the 20 and have half the risk. So then if you get a 20 point, that's a 4-to-1 risk to reward ratio. I'm not as concerned. Um, I have my rules. I set 10 and I go for 20. And I find sometimes, it'll spike up here and can go back in your direction. But when you kind of get a back crossover, you got to be out. If you're wrong, you're wrong. Take a quick loss. Now, if this would have come right back, say I got in here, and this went down, and this candle started ripping right back at me, I wouldn't let it go back up and hit my stop. If I'm wrong, I'm wrong. Then I'll nip it. I'll lose 5 points. That's where you getting to know one instrument. The reason I trade only the ES, I trade I trade oil as well, but that's only if the markets are going down, oil's going up. That's kind of while if I miss an entry here, I'll jump on oil if I can and set a tight stop on oil, because when you get these big dumps here on the ES or the Dow or the NQ or the Russell, those are all the big indices that you can trade on futures, then oil is going to go north. So I hope this was helpful. I'm going to get ready for the New York Open here and have some coffee. But I wanted to get a quick video out to you guys. So just to recap here, for those of you who've not watched my videos, please like and subscribe. I'm not a big professional YouTuber or anything, but I do want to help people. And I had some people that I know and some friends ask me to explain to them my trading strategy. When I say it's simple, but it's not easy. The non-easy part is following the rules. And that's the difficult part, is because you want to move stops and you're afraid to enter. You got to enter when the signals cross, like here. This comes from here and it just starts waterfalling down, and when this crosses here, you got to get in. If not this third candle, I mean, you got to get into this move here. You got to get into this move in this break of this candle here. Put your 10 here. But I mean, if you got that move and you stayed in it, and even as it started to go in your direction, you could go to bed. And if you moved your stop inside break even and just let this trade go, I mean, this would have been a 48 point trade. You can get huge moves on this. This is where execution, trade management. There are some very, very big traders and friends of mine that I know that once they get into this one, they'll set, and I'll do this as well. If I have 4 or 5 more contracts, what I'll do when I have a trade going my direction, I'll set a contract at 10. I'll set one at 20. I'll set one at 30, and then I'll set 30. I won't set anything really beyond 30. That's not my. I mean, if I get 30 points, it's fantastic, and there's potential waterfalls you can get. So let's just, for example, if I had 4 contracts, I probably would set those 3 at those levels, and then the remaining contract, I would have to break even in case it didn't run to those. So, and then if it continues running, I leave that 1, because when I'm back to the charts, if this thing is going down, I still have 1 runner. I got 1 runner. If this thing drops and Trump sends a tweet and this thing drops 100 points, I got 1 runner in there that can be a huge win. So that's kind of my strategy on multi-contracts. But let's keep it simple. Let's just say you're trading 1 micro, $50 risk, and you're just clipping 10, 20, 30 out of the market and have low risk. This strategy is built for you guys. This strategy is built for me to be able to teach my 9 and my 11-year-old kids how to execute it. Okay, the blue line crosses this fat line, and we go short. The blue line crosses the fat line going up, we go long. That's it. We set stops. We set a target. I'm teaching my 11-year-old is really getting the concept of this. My 9-year-old too. He's just not as interested. He's trying to keep his attention focused on this one. But if a 9-year-old and 11-year-old can learn this, you can too. In the comments below, if you want to reach out to me, you can reach me on Telegram or you can send me an email. But one thing I would ask you to do, it doesn't cost anything. If you can like and subscribe, that would be helpful. My oldest son is like really, he really wants me to blow this thing up. I'm like, well, I'm not really as much about blowing it up, son, as about just trying to help some people. I've been training for many, many years, and trust me, I've tried the ICT concepts, and I'm not saying those things don't work, because there are a lot of successful traders. There is simplicity is what I'm seeking, and this is very simple, and it works, and it's not a contrarian. Catching a falling knife and reversals, and trust me, when the market's going super choppy sideways, I'm fairly good at reversals, but you've got to be fast, and you've got to be aggressive. Give you a perfect example on this one. So the London low was broke here. So it tapped it here, and then it broke it here. So when are you going to get into this? Are you going to catch this falling knife at 65.74? And in hindsight, it's great. If you knew that was going to be the bottom, then you'd be up 15, almost 20 points. But who's going to catch this falling knife? The reality is there's a couple things that I look at to possibly verify that this is in, but you got to be fast and take your profits and set your profits to break even. But again, I'm going on a tangent. I don't want to get on that. That's another time for another video, and that's for a sideways market. When you get a market that's just going, it's going through this way, and it's just moving in 10 points up, 10 points down, 10 points up, 10 points down. I've had days where it's doing that, and I've sat there and just chopped 8 to 10 points out on 5 different trades and had a very profitable day. It's exhausting. You got to manage this, and if you're not a full-time trader and can't sit in front of the screens all day, then that's not going to be for you. Most of the time, the market is trending, and one thing I wanted to talk to you about is in a downward trend market, and we are 100% in a downtrend market, is you want to try to be going short more than long. Okay, that's where a lot of people get this wrong. So I'm looking more for short. So when you see these run-ups, it's kind of short-lived, and then you have a big waterfall. Run up, looks like it's going to go, okay, here. Looks like it's going to go up, and you get bigger drops. So in a downward market, you really want to be leaning towards shorts, not towards longs. And I read a book somewhere, and I can't remember what it was. In a downtrending market, 80% of the time the bigger moves are down. In an uptrending market, 80% of the time the moves are up. And again, I've read so many trading books, I don't know which one it was, but I thought that's an interesting stat. We are definitely in a downtrend. So if you look at the hourly here, let's look at the hourly here. Let me bring this. Let me crunch this up. I got to change the settings on my trading view. I've got it set just for the smaller time. So you can see here, this is the hourly, and then you look at the daily. So the daily, what does that look like? It looks like that's a downtrend, guys. I mean, we came up here, and I mean, since January, we had a January 28th, so we're now at the end of March. I mean, this is just a a big old downtrend. So now if you were a longer term trader and you were using the if you were using the same concept I'm using now, because it works on all time frames, is when this crossed here and you got a good signal, so you would have been at 69.17 on a short, and you're now at 60. That's 400 some points. Now obviously you're not gonna let your money sit there like that, but I mean from a trading standpoint, if you're trading the S&P, getting in and out, and you can short it, this works on all time frames. So I'm gonna leave it at that. I hope this is informative. I mark out levels. This is the Trump tweet on 3/23. Prior to the Trump tweet, we were sitting down at a very low 64.84, and to me it looks like we're headed back down to that. There's no support here. You got some support here going back to we're gonna about to breach November lows. You got some, these are wicks down, but to me I think we're gonna blow through all this. This doesn't look like it wants to hold at 65.80 going back to here. I think we're gonna head back to, you get some, this is where we had some breakouts. I definitely think we're headed back, unless there's some really good news, I think we're headed back to 64.82 downward trend. So it's tough to short long term, but we're just intraday trading and scalping. Let's remember that as well. So I hope you enjoy the video. Contact me if you want to talk. We could actually even live trade. I've got unlimited Zoom, and it'd be fun to chit chat with somebody during trading session. So take care, and I'll talk to you soon.